It seemed like Bitcoin was poised for a rocket ship to the moon when news of Blackrock's ETF filing came out. And then it seemed like the thrusters were ripped right out of that rocket ship because we were seeing headlines about the SEC not liking the filing so much. I'm going to explain to you why that's all a bunch of noise. I'm going to assume that in the past week you weren't living under a rock in the Bitcoin space and did indeed hear about Blackrock filing for an ETF. And then, a few days later, maybe it was about a week later, we saw that the SEC wasn't quite so happy with the filing. They needed some changes, and some people were seeing that as a good thing, other people were seeing that as a bad thing. I have here an article from the Wall Street Journal that I'm going to be going through, and some clips from a Swan segment, and I'm going to try and help you figure out what is actually going on here, and my take on all this. So, let's start with this bit from the Wall Street Journal. SEC says spot Bitcoin ETF filings are inadequate. Now, let's pause there for a second because something that I want to go through here is looking at the word choice. It doesn't say inappropriate, it doesn't say to be banned, it doesn't say gonna be ignored, it says inadequate. That is something that can be fixed. You can take something that is inadequate and make it adequate. Let's continue. Regulator, SEC, tells NASDAQ SIBO that recent filings from BlackRock, Fidelity, and others aren't clear and comprehensive. All that says to me is that they aren't clear and comprehensive. That's exactly what it says. And maybe there's some things that they could do to make it clear and comprehensive. Now, this article I'm reading was posted June 30th, 2023. Now, I point that out because something I heard in a recent Twitter Spaces. Pierre Rochard was talking about that article that came out from the Wall Street Journal and his subsequent follow-up video. Now, you might think, boy, Pierre got that video out right away. Well, something I learned listening to that Twitter Spaces is that that article was written months prior to its release. And Pierre had news of that article. He knew that it was coming out. I don't know exactly how he knew it was coming out, but that's why the video was so ready to go. He made the video so that when the article did finally come out, months later, he could release that video right after it. I say all that because even though this was posted June 30th, this could have been written weeks ago. We don't know when this information came out. It says people familiar with the matter. A lot of the times, we look at a release date on an article and go, oh, that was just written a few hours before. Maybe right then, because we get the news at a certain time, we think that that's exactly when it came out. That there's just like it was typed up minutes before it was posted. No. That was typed out sometime before the release. Obviously, was that right before, minutes before, or days before, or weeks or months before? We don't know. The Securities and Exchange Commission said a recent wave of applications filed by asset managers to launch spot Bitcoin exchange-traded funds are inadequate, according to people familiar with the matter. Prices of Bitcoin and other crypto-related stocks have surged since mid-June when BlackRock filed paperwork with the SEC for an ETF that holds actual Bitcoin. Now, you might say, well, look, right there. It has to have been written just an hour before it was published. Clearly, it's talking about the price surge. No. Ladies and gentlemen, just because that's what it says now doesn't mean that's what it said a week ago. It could have said something else a week ago. They edited the draft and then published that. So we don't know when this was written. The cryptocurrency has climbed about 20%, rising above 30,000 for the first time since April. Shares of Coinbase Global, which is listed as the custodian for BlackRock's funds holdings, have soared more than 30% over the same period. The SEC has repeatedly rejected such funds going back to 2017, more than 6 years, on grounds that they are vulnerable to fraud and market manipulation. At least half a dozen ETFs that own Bitcoin futures are already on the market. Investors and analysts viewed the bid by the world's largest money manager, BlackRock, as the best hope yet for a spot Bitcoin ETF, partly because of its near-perfect track record seeing applications through. Something like 580 have gone through and one was rejected, so yes, near-perfect. Some industry watchers predicted that BlackRock's filing would appease the SEC's concerns through an agreement to share surveillance of a spot Bitcoin trading platform with NASDAQ, which would list the ETF. Yet, the SEC told the exchanges that it returned the filings. You submitted an application, we're going to return that to you, because they didn't name the spot Bitcoin exchange with which they are expected to have a surveillance sharing agreement. Now, you might say, what does that mean there? Surveillance? I'm in Bitcoin. That means bad things. I don't want surveillance. No. Okay, hold on. Hold your horses. Just because the word surveillance there doesn't mean it's all bad. I'm not trying to defend surveillance, but sometimes words have multiple meanings. That's all I'm trying to say here. So hold your horses. All this says is with which they were expected to have a surveillance sharing agreement. It just says it wasn't in there. The exact wording here is filings because they didn't name the Spot Bitcoin exchange. That could just mean they forgot to put the Coinbase thing in there. Now, we have heard that Coinbase is going to be the custodian for Blackrock's Bitcoin, but maybe, say it's crazy, but maybe someone forgot to put that in the draft that was submitted to the SEC. Now I'm going to jump over to a clip here where Joe Carlasari, Elliot Johnson, Greg Foss, Don Bay, and Rafa Zaguri, who is Alpha Zeta on Twitter, who is the CIO at Swan, are talking about this exact thing. And Elliot Johnson, who has experience in this world, explains things as clear as I've heard anyone explain it. Let's listen.
What I have heard in the past week is that the key to the BlackRock filing is the surveillance agreement they have managed to get put in place between Coinbase and NASDAQ as it relates to their ETF.
Now, what he just said there ties into what I was saying a minute ago, talking about the surveillance agreement, and it wasn't in that filing. So maybe it just got overlooked. That's something to keep in mind here. Let's continue.
And so within the rules, there is mention made of the need for there to be surveillance of a venue of significant size where the underlying asset that you're going to hold in your ETF trades. So significant size, Coinbase checks that box. And the surveillance mechanism is through NASDAQ's existing technology that the regulators use to surveil all kinds of other things that trade on NASDAQ all the time. This is something that is new to the BlackRock filing. And it's one of those things that when you look at it, you think, well, why is that in an ETF? You know, we don't really talk about those things in other ETFs. That's a clue that BlackRock knows what they're doing. And it's a clue that they've been talking to the right people because they're putting in place structures that seem a little bit unusual, but are meeting a particular need within the rules. And so what I think we kind of have evidence of as it relates to US Bitcoin ETFs is you've got the SEC on record saying that Bitcoin is a commodity, not a security, which is also, supported by the CFTC Bitcoin futures. You've got now an exchange of significant size, being Coinbase, providing data on their Bitcoin trading to NASDAQ, who has a surveillance system that allows the regulators to look at the trades of the underlying and then look at the trades of the ETF itself and perform its surveillance function that they're required to do as a regulator. That's a really, really big deal. And that's one of the reasons that we are so confident that BlackRock's going to be successful on this, because you would not put a feature like that into your product unless somebody had told you, here's the checklist of things that you need, go ahead and go and do them. And so, it's similar, in fact, to our filing. We had to do things like remove, possibility for in-kind creations. We had to put in stipulations that we wouldn't rehypothecate our Bitcoin. We have to know our counterparty. There's all these things that are much more buttoned down in our Bitcoin ETF than, they're sort of assumed to be okay when we launch an equity ETF, for example. So those are the things that we expect to see being the reasons why they're going to be successful. And from talking to some other folks, it sounds like the other exchanges that have listings are running fast to try to get that feature built out as well.
What I take away from all of that, because I don't really speak that language, but what I hear from all of that is this is a new system. Having a Bitcoin spot ETF is something that doesn't exist. When you have a major institutional player like BlackRock, and then other people that have followed in their wake, like Fidelity, like WisdomTree, etc., they're going to have to do things that are a little bit different than things that we've seen before. That's why they have to do these things in a very particular way. Now, there's one other aspect here that you need to keep in mind. What happened about a year ago? FTX blew up. And what happened because of that blow up? Regular Joes and Janes lost huge amounts of money, and those people are not happy about that. These people got bamboozled. They got screwed out of their hard-earned money, and they are rightfully pissed. Well, what do people in power want? Politicians that are in power want to stay in power. And if you have a whole lot of constituents that are really pissed off at you, you're probably not going to stay in power for all that long. I say all of this because maybe, just maybe, I'm not taking the state side here. I want to make that real clear. I'm just playing devil's advocate, taking a broad view of this. Maybe, just maybe, the SEC is going, hey, we can't have another FTX-like debacle. That can't happen because I can't have my constituents pissed off at me. I don't want to risk my job. So we need to make sure that any more of this crypto, whatever it is, stuff that's going on, it really needs to be secure. We need to make sure what's going on because I can't have millions of people super pissed off at me. Thus, ambiguity enters the picture. People that are familiar with these different filings might go, this looks a little bit different. And as I just explained, it probably would look different if it's a brand new thing. But the real signal amid all this noise is the same as it ever is. It doesn't matter what's going on in the news. Anything that happens is good for Bitcoin.